It's showtime. Hey there, Sandy. How you
Hi, Mike.
doing? Well, to anybody that showed up right on schedule, we want to thank you for being there. I think that we have a good session tonight. We're going to talk about how to raise your credit score at least 40 points in 45 days. And there are times when you need that. But Sandy, just before we get started and while we're waiting for people to load up, when would you think that people would need to raise their credit score like that?
Well, they need to find out what their credit score is first, and you are very helpful at getting that answer for them. And then if it's pretty low, they're going to need to get it raised in order to buy a house. And sometimes even the credit scores can affect their rental too. So it's a pretty important number.
Well, I think that most people think about when their credit scores are low, they want to get it up to qualify. But I actually see it happen a lot of times where people already have good credit. They just want to get it higher. And an example is, let's say that somebody comes in about 680, but interest rates really get substantially better when you're over 700.
Mm-hmm.
That would be a good example of when somebody might want to get 40 points. And if you can get it in 20 or 30 days, that's enough time to make the difference in a much improved interest rate over the fact that, a 700 is always going to be a better credit score than a 680. So
definitely. Yeah.
There are a lot of people that hang out in certain areas and they just don't understand it. But that's what we're going to talk about tonight. I promise you, I'm not going to waste anybody's time. I refined this down. I think the first time I did this particular webinar, I did it in about an hour and a half. So we promise I'm not going to be here that long. But I do think it's good information. So with you, any more waiting and blabbing, I am going to move this in here. I say I am.
Let's get started.
There we go. All right. That's the little version of it. Let's make it a little bit different. Let's make it like that. Okay. How to raise your credit score in 40 points in 45 days. Of course, my lovely wife, Sandy Durr from Jane Bird Properties International. And I call myself the Kingwood Mortgage Guy, in case you weren't aware of that. So here's what we're going to cover. So this is a good example of if you know you're in the right place. And first thing we're going to do is we're going to talk about what is a credit score. Why do they have credit scores? Why should I waste my time trying to improve my credit? What are the consequences of having bad credit or low scores? And then I'm going to go through some quick hits as to what are the fastest ways to increase, not my credit scores, your credit scores.
That's right.
So let's get started with that. Now, if you look at the slide that I've got or the image that I've got on the right side of the screen, how are my FICO scores calculated? Now, I point that out because FICO is a key thing that you're going to think about. Is there are pretenders, I think is the better way to put it, where there are consumer credit reports out there that do not coincide with what we look at, what I look at when I'm looking at somebody's credit for a mortgage. Right. And the same people that when they're looking to borrow money on a car, it's not the same as the consumer credit report. So you need to be careful that it's a FICO score that you're looking at. And I'm not going to go over this slide too much because it's really just a pretty slide there. So what do credit scores mean? Well, a credit score is a prediction of your credit behavior, such as how likely you are to pay a loan back on time based on the information from your credit report, right? So they give these scores out. The crazy part is the scores that you get are based on what you've done in the past.
Right.
Well, this immediate makes it a kind of a disadvantage for somebody that's brand new that hasn't ever established any credit, right? Because they don't have a history. And if somebody doesn't have a history of credit, then the chances that somebody would lend to them based on no history is very limited. The information we're going to talk about today is going to help those people also. So let's look at the image here. If you start up here in the upper left, 781 to 850, most of the bureaus stop at around 850. Now, they're not all exactly at 850, but they're in that 835 to 850 range. And that is anything 800s you are golden. I mean, those are great credit scores.
Is 850 the highest it can go, or can it go higher?
No, that's the top.
Okay.
And like each bureau, and I'm not sure which is which, but not all of them even go to 850. I mean, one of them might go to 836 or one to 840 or something like that. So they're kind of fuzzy there. But anyway, between 780 and 800 is rock star quality. And then you see the next one they got down here is 780 to 661. Now that's a 120 point difference. And that is probably all good for conventional loans. But once you get anywhere in the 600s, a lot of the people that I take applications from, a lot of times they're better served with FHA loans. And then there's the non-QM thing. And the non-QM is, you pretty much have to have a 680 for that. Yeah. And then if you see fair, they call fair 601 to 660. And then poor 500 to 600. Now, you can still get loans in the 500 to 600 and all these. Once you get below 400 or 500, you're probably not going to get a loan. I mean, you've got some work to do, right? Because it takes effort to get to be that low. Now, have we helped people get their scores up from there? Absolutely. And the one thing that I think I need to say to everybody is the credit scoring. One of the things that you can count on is it can change. And it can change for the better or it can change for the worse. It can also change pretty quick, which is good. It's dynamic as things are, as the creditor reports this information to the credit bureaus, things can change as soon as that gets posted. So that's good and it can be better.
So the 3 to 499, those could also be the people that just do everything in cash, keep their money in the mattress, that type of person too?
No. Those guys have zero credit scores. I mean,
zero. Okay.
They just don't have credit scores. The guys that are in the 300 to 499, I think I've seen a 380 is as low as I've seen. Wow. And it was ugly. I mean, the guy had never, I don't mean to call him a credit criminal, but the actions that he did, I mean, he borrowed money. He never paid anybody back. Yep. And let me tell you, they track that stuff. And obviously, that's why they give you these scores. And you earn a reputation on how you pay based on these credit scores. So just be aware that that's it. And I don't think that's anything new or revelation to anybody there. Okay. Why it's worth it to have great credit? Well, if you're talking about inflation, and I think about that when I look at this, the best thing about having a good credit score is you get lower interest rates. Mm-hmm. You have a much better chance for loan approval, better negotiating leverage. Now think about it. If you have a 780 or a 800 FICO score, you can go to somebody, that they're looking for people to borrow money, and you can go anywhere and borrow money with those kind of FICO scores. Mm-hmm. So your negotiation, you can take it or leave it. You're looking for your best deal at that point. Higher credit limits. So when you apply for a credit card or any kind of line of credit, because you have such an excellent reputation based on your credit score of paying your debts as agreed, you'll get higher credit limits. Mm-hmm. Easier approval for renting or buying. Well, yeah. I mean, when somebody wants to lease a home, what are they looking at primarily?
Oh, they're going to definitely look at your credit score. The landlord will look at your credit score for sure.
Now, is that all they look at, or is that just like a cutoff point? They say if they're below this number, they're out.
Not necessarily. They'll look at rental history. They'll look at if they've had a good job for a while, pay stubs, things like that.
Okay, but it obviously makes it easier the higher your credit score.
Right.
Here's one a lot of people don't know, but your insurance rates also have a component of them that's based on their credit score, on what kind of rates they get for insurance on both your car and your home.
Right.
Eligibility for better credit card offers. There's some people that get credit card offers every day. And it's because everybody wants them, the great payers, to spend their money, right? And they want to earn interest on that. And then the final one that I've got down here, and there may be a bunch of others, but this is the one I listed, is security deposit waivers. And an example is when you apply for a water account or some kind of utility account, they'll look at your credit and they'll determine if they want to get a security deposit from you or they'll waive it. And in many cases, the higher FICO scores, they get to waive that. So the bottom line is just less expensive to have good credit. And I like my slide here. It says, you smart, you very smart. Matter of fact, you a genius. So, maybe not, but anyway, I thought it was funny. So, and my humor is not that good anyway. I've proved that over and over again. What are the consequences of having bad credit? Well, there are some tough ones. And one, if you do get a loan, you're going to pay higher interest rate.
Yep.
You've got a potential to get a loan and or credit denial. It's going to be difficult to rent or even buy a house. It's just harder. Higher insurance premiums. We talked about that. So things are going to be more expensive for you. I don't know if you knew this. When you apply for a job, one of the things that the employer is going to do is they're going to run your credit. And if you have bad credit, they consider that bad character if you have not been able to honor your obligations. It's a big factor, and a lot of people don't realize that. So it's all negative. Limited access to financial products, and then, of course, the security deposits we talked about just a minute ago. So there are bad consequences, but you can live, because a lot of times, just because somebody has had some kind of credit trauma, you've had maybe a death in the family, maybe you lost a job, maybe you got sick. All those things can lead to periods when your income is cut off. And when your income's cut off, a lot of times you don't have the money to pay, and you got to pay the most important things, which is shelter and food, right? Choices on which debts that you pay. And the good news is I've seen time after time that people that go through that will come out of it. And what they do a lot of times is they just operate on cash. And at some point in time, though, they kind of they bump up against that ceiling, that glass ceiling, where they have to do something with their credit. And I've helped a lot of people that come out of that kind of situation improve their credit and do it very fast. So very doable. And anyway, it's just something that we see a lot. Okay. So what are the best ways to improve my credit quickly? Well, this little graph on the right side kind of shows the things that the credit algorithm kind of weighs. And I think it's interesting, but the most important one, repayment history. Well, duh. I mean, you think? But what's crazy about it is it's only 35%. I mean, I would have thought that would be 50% or 60% is how you paid, what your repayment scores were. 35%. And I explain in a minute, I'll tell you why I think it's that way. Now, the next one, total debt. And this is really revolving credit card usage. And that's 30%. So between the first and the second, the repayment history and the credit card usage or utilization, that's 65%. And that's where you really have the biggest opportunity to, and I'm not sure the right word is manipulate, but that's probably the right word. Mix the new credit, the length of credit history. The length of credit history is going to be what it's going to be.
Right. Yeah.
So what I think we'll do is we'll get a little bit deeper, but right here, I'd ask you to look at some of the questions that consumers have asked. And let's just tell me what are some of the questions that you've got there that some of the consumers ask.
So when I'm talking to my customers, one of them is how can I improve my credit score quickly? How can you do that? And you're saying what, within 30, 45 days?
Yeah, I've seen it happen as fast as 21 days.
Wow.
And really, there's a couple simple things. And I'm going to hold that question because the rest of this presentation is all about that. So that's a great question. What's another one?
Okay, so some of them carry some pretty big balances on their credit cards. It says, what are the best strategies to pay those balances off effectively?
Gotcha. Well, I don't have anything about that one, so let's talk about it. The one that I've used personally and that we've tried to use and we have talked about, matter of fact, next week, by the way, our subject is how to get out of debt, how to get completely out of debt. And we're going to use Dave Ramsey as our model because I like him. But Dave Ramsey does the debt snowball.
Right.
And that snowball is where you focus on one of the debts, usually the smaller debt, and you apply any extra money. And the key to doing any of that payback is with some extra money. That extra money's got to come from somewhere. But you focus that money in a pattern where you pay the smallest debt off, you multiply, or after you pay that puppy off, you take the money that you used to pay to that to the next one and the next one, and it works really good. So that's a good question, and we'll talk more about that next week.
Okay, so how can I increase my credit limits?
Okay, well, saw earlier on the slide, the credit limit is one of those things that the creditors hold on to, and as your score goes up, they're a little more inclined to give you a bigger limit. And so you've got to have a pretty good history of paying them to allow that. But also, sometimes they do it just without even asking you. They just do it. The other thing is you got to call them and ask them sometimes. Hey, I'm going to be focusing my efforts on using your credit card specifically, and I'd like if you would raise my credit limit. And they will do that sometimes. Depends on your record.
Okay. What are the impacts of being an authorized user on someone else's account? Because sometimes that happens, mom and dad and their adult child is still on it, or
yeah. So we're gonna hold that one off because I've got a couple slides on authorized user. That's one of our primary ways to improve credit quickly. Yeah. So
okay. Well, how can you dispute any errors? Because sometimes there's errors on your credit report. How do you dispute them?
Okay, disputing and errors on credit reports is almost a cliche because the credit data is, I mean, it's massive number of data points that come into a credit report. Mm-hmm. You're more likely to have errors on your credit report than not have credit errors on your credit report. So my guess is, or my recommendation to you is that you should check your credit report to make sure that you don't have errors, because 75% of the chance you're going to have errors on there. So the first thing is you find out what those errors are, and then you go directly to the credit bureaus, the Experian, the Equifax, the TransUnion. There's free toll-free numbers that you call them and you email them and you mail them. That's the way you challenge those things, and disputing them, not that hard. I've seen it done a lot, and we've done it ourselves. So, yeah, that's one of the things you'll be doing.
Okay. Is it possible to raise this credit score by 100 points in this 45 days?
Absolutely. Yeah, I'll show you an example of one in just a minute.
Okay. Does my age affect my credit score?
Absolutely not.
That's okay, good.
One of the things you cannot affect your score is age. So, yeah.
Okay. So say I am this young person. I'm just got out of college. I've got my first job. How do I start building this credit?
Okay. Well, let's start right there. Then the first thing I would tell you is get your parents to put you as an authorized user on their credit card. Now, I'm going to show you a little bit about that, but is that the last question?
Yeah, I think those are the most common ones that I get.
Let's go to the rest of this because I talk about these quick fixes, and you're going to see how those work.
Okay.
So specific tactics to improve your credit scores are authorized user, credit card utilization, 30% or less. And I put here, no credit cards, get some.
Right.
Need credit cards. If you can't get a credit card, a lot of time, well, I don't want to get too far ahead of myself. Secure credit cards, one of the big ones that I've used a lot. Mm-hmm. And some credit cards are better than others. So depending on which credit cards, the algorithm reads some of the primary cards, a Chase card or a Wells Fargo card, at a higher level than they might be a Best Buy card or a store credit card. Here's one a lot of people don't talk about. If you have a lot of credit and you don't have a lot of time, it's a good plan to auto pay the minute, you put your credit cards on an auto pay of at least the minimum payment so that you don't have late payments. Okay. A lot of people don't talk about that, but it's one way that it allows you to not have to worry too much about making those payments on the right dates. It's going to do it for you. And then the last thing I put on here is a balanced credit usage. And when I say that, we categorize the credit cards into revolving credit cards, installment debts, mortgage debt. Really, those three are the main ones. And if you have a couple credit cards and a car loan and a home loan, that's a good balance, right?
Yeah.
That's what they're looking for. They're looking for different categories where you have a consistent payment history. Okay.
Right.
All right, let's get serious. All right, this is a real credit report. This is a real live person, even though I blacked out all the information that is on there. And this is one, if you look at this, if you see in the middle there that says 624 for Experian, 633 for TransUnion, 627 for Equifax. Now, below that, it has potential score improvement. Now, this is kind of cool. 107 points on the Experian, 89 for TransUnion, and 87 for Equifax. So you could go from a low 600 to a 700 FICO score within 10 days on this one.
Wow.
And what this is saying is that the reason that their score is down low is because their credit card usage is over what it should be right now. The way that they're being judged based on the revolving credit. And I'm going to show you, this may not be the exact same person, but this is what this person would look like. So look at this next one. Say that, click it. All right. Now, this is the guts of a credit thing. And I'm not sure if you're on a phone, this is not going to mean anything to you. But if you're looking at a laptop or a desktop, you can see this. And it's got date opened, limit up here at the top is where I'm looking at, and then balance. I use my mouse and I kind of wiggle it like people can see this. I don't think you can see that on there. But the other thing, the payment history out here. So what I'm looking at is this first one that's outlined in red has a $1,800 limit. They have a balance right now of $1,762 and a payment of $78. No late payments. Never made a late payment. Down here in the second
they're at the top of what they can borrow, right?
They're about 98% of the usage, and that's a problem. Same thing here, $2,000 limit, $1,349 balance. I think that's a $44 payment. And then down at the bottom, actually over it, $500 limit. They've got $513 borrowed. All right. So This is the kind of thing that you can fix fast as long as you've got money. And what I did, because I know that was a hard one to do, I kind of took that same information and put the same numbers here, and I added this one number, the usage. And what we're doing here is we're just dividing the balance against the limit. And you can see that the 98%, I knew that because I'd already done this work. Anything over 50%, they take points away from you. When you get to 50%, you don't get points and you don't lose points. And then as you go below 50%, you start gaining points, but you really don't gain many until you get to about 30%. Okay. The sweet spot we've learned is 10%. So at 10%, like if this debt was $180, their score would shoot up. Mm-hmm. Same thing here, 2,200. Down here, 500 would be $50. Okay. It's really important that you keep that mentality in mind. Is one of the ways that you can manipulate your score is by having the balances at the point where they reward you for having those particular balances, right? And that's how you can affect your credit score fast, really fast. So
question, Mike. So what if what if I just redistributed this to another one or two more credit cards and still keeping it 30%? Is that taken away from you then?
Well, that's actually a good strategy. That's something that you could do if you didn't violate that 30% on the credit cards that you're moving the debt to.
Right.
So let's say you had 5 credit cards, 2 of them had no debt, and maybe you were focusing your purchasing on the one of those 3 or all 3 of the 3. You could definitely restructure that debt and improve your credit score.
Okay.
One of the things you can do. That way you do it without, you could do it by one, asking for the higher limit. That's one thing you can do. You probably wouldn't get it when you're in a position like that. The other thing is you can pay down some of the money, or you can restructure it like what you talked about.
Okay.
So that's good. So that's a the first thing that we look at when I'm looking at the credit score, and it tells you right there on the credit report your potential increases, and that's when we know we're going to be able to succeed. So why credit cards are weighted so heavy on credit scoring? This is something a lot of people don't know about, but credit cards are unsecured.
Mm-hmm.
I'm going to explain what that means in a minute, but installment debt is usually secured. And I'm going to use an example of an installment debt as a auto loan. Okay. An installment debt is usually you have an amount that you borrowed, and then you have equal monthly payments that you pay back for 3 years, 5 years, 6 years, whatever. And it's the same amount you pay each month, right?
Right.
If you go back to that slide I had there, you notice they don't have a usage number on there. They're not graded that way. So what happens is, and you have mortgage debt, always secured. When you have mortgage debt, the security or the collateral for the loan is the house. On the auto loan, it's the auto. But on credit card debt, it's not secured by anything. So what happens when you don't pay a credit card? What happens?
It's like nothing.
Nothing.
Right?
In Texas, nothing happens. In Florida, nothing happens. Now, some states, they can put a judgment on you, but not in credit. Not in Texas and not in Florida. The creditor is out.
Yeah.
And they don't like that. And they had a huge weight when the algorithms for the credit scoring algorithm were set up. They did it so that they had some way they could hurt you if you didn't pay the credit cards. And there's some people that say that the credit card industry was the author of the scoring system. Could be. I believe it's true, really, the way it's set up. So if you don't pay your car or your mortgage payment, what happens? They come take it away.
That's right.
But on a credit card, they can't do anything. And in Texas, a state that's really definitely consumer friendly, you don't have to worry about the repo man. Now, there are people that will put a judgment on your credit card, but it doesn't stay. I mean, if you challenge it, they have to take it off because it's illegal. I've done it at least a dozen times. So interesting. I thought that was kind of interesting. And that's why the credit scoring thing is like it is. I mean, credit cards are such an important part of how you manipulate these scores. Authorized user, let's talk about. This is one, a lot of times it happens when young people, and it's usually a parent. It's not usually a boyfriend and a girlfriend, but in this case, with this picture, I thought it was kind of good. But this is a definition. An authorized user is someone who's been added to a credit card account by the card's owner, also known as the primary card holder. The authorized user can make purchases with the credit card as if it were their own. However, the responsibility to pay any charges remains with the primary card holder. Now, I'm going to challenge that real quick, because you can put an authorized user on a credit card and not give them the credit card, not give them the credit card number. I would say that if I was going to make somebody an authorized user on my credit card, they wouldn't have any idea what the account number was. I mean, I could put them on there to help them, but they're not going to be using my credit card. That's not the reason I'm letting them do that. I'm letting them do that by the good credit that I have benefits them, right? So you do that with your children. Could be with your parents. I've seen it done that way too. So does that make sense to you?
So just by having them as an authorized user, they're not using the card or anything, that's going to help them improve their credit score.
Yeah, what ends up happening is that line of credit sits on their credit report now. So what
piggybacks on it?
It becomes one of their creditors, and it's got history, which is a good thing. It's got low balance, or it's got a high limit but low balances. Right. So it's a big win, and it's a very quick way to improve your credit score. And I've seen people's credit score jump like the proverbial chicken when you did this in the right situation. So it's a win. Now there's some user specifics though. If you want to be an authorized user, if the credit card holder has perfect payment history, you don't want to be a authorized user on a card that doesn't have a good history, right? So you want to.
Right.
Are you paying your bills on time? Credit card holder has a low to zero balance on the account, so you want a very low balance. Don't expect to use the card. I mean, if and particularly if you're going to me, you don't expect to use my card, and don't ask to be an authorized user unless you know these details, right?
Right.
But this is really, one of the fastest tracks to improving your credit, particularly for somebody young who doesn't have credit. All right, moving on. All right, tactic number 3, secure cards. So here's an example. When you have that credit trauma of the one we talked about before, you haven't paid anybody. There's nobody mailing you credit card offers, right? I mean, your credit's bad. You've got a 540 FICO score. They don't want you to borrow their money right now. If credit cards are so important, then how do you get one? Well, there is a system for secure cards. And what you do is you go to your bank or credit union. Credit unions pretty much do this all the time. Banks, the bigger banks, not so much, but some of the smaller banks will do this. Now, what you do is you create an account with that bank, usually a savings account, and you ask them if you can have a credit card against your money, right? So the secure card is secured against your own savings in that account. So the bank can't lose. I mean, this is a great deal for the bank because they're probably going to charge you 15 to 20% interest on your money. And you get to use these cards like it was issued to you. Now, the key is you have to make sure that they report to all credit bureaus. Not all of them do. And when creditors' credit cards do this, they have to get a subscription for that particular card. So it costs them a little bit of money to subscribe. But I've seen people get the wrong secure card and it not have any impact.
Yeah.
Now, so you get this credit card, you got to know how to use it, right? You can't just say, I've got credit. And I've seen this happen a lot, is where people take the credit card and it's a $500 credit limit and they go and spend $500. And it's the worst thing they could do. And they go, why did my credit get better? Well, here's how you use it. Use the card once a month. And I usually tell people, I say, you can spend, if it's a $500 balance, I say you can do 2 things. You can either fill your car up with gas, or you can take your person, your favorite honey, to dinner 1 time a month on this credit card. After that, you're done. And you can't do both. You get to choose one or the other. You spend no more than 10% of the limit. When the bill comes in, pay it immediately. And then the next month, you use it 1 time again, and you just rinse and repeat 1 time. This is not a credit card. It's a tool that's going to allow you to build your credit. And this works like magic, particularly when you've had bad credit and you're kind of refreshing yourself. You're coming back into the credit world. This works fantastic. Also, when you're brand new, a secure card is a very good tool. There are secure cards available online. I haven't used those, but I've seen people that used them. Now, the limits are smaller, but I like the physical part of going into a credit union, laying the $500 down, getting the card and all that kind of stuff. But one of the really fast ways, and the reason it takes a little longer is because they're going to mail you a credit card that takes 7 days or something. You're going to go spend it, and then you got to wait for that bill to come in so that you pay it, because you don't want to really apply for a loan until you've paid that debt. Okay. All right. Make sure the information, we're on tactic number 4. Make sure the information on your credit report is correct. Like I said before, credit reports are full of data. Having incorrect data on your report can negatively affect your scores. So have your credit run at least twice a year, but every 6 months, you want to get somebody to run your credit to make sure the information being reported is correct. And credit reports are notorious for having incorrect data, which I shared earlier with you. Okay. And then be wary. This is my story about consumer credit reports. So there are a group of, and I'm not going to list them, but that are consumer credit reports. So usually free reports that you get, and they advertise free report. The problem with them is the algorithm for the consumer reports is different than a FICO report. And like we talked earlier in the presentation, that 850 is the highest score on a consumer credit report. That score could be up to 950. So they go from 350 to 950. And so you get kind of convoluted or scores that aren't going to be consistent with the FICO scores. And I had this instance where a realtor friend of mine called me and she applied. She wanted me to do her loan for her. And I said, great. And we talked about it and I ran their credit. And the husband, who surprising, he was an engineer and smart guy, made a lot of money. His credit was about 100 points less than what they thought it was. And it turned out that he had challenged, somebody had charged him something. He challenged it, but he just said, I'm not going to pay it. Well, one late on your credit report can cause 100 points dip. Mm-hmm. But on the consumer credit report, his credit score was fine. It was well in line within this over the 700s. But they looked at the consumer credit report. I sent them my credit report and they went, well, why is it so different? Well, it's a consumer credit report. It's not a FICO report. So this has happened multiple times. So don't be fooled and be aware that consumer credit reports are just not consistent with the FICO model. So that's something that you want to stick with. All right. So what kind of questions do you think? Let's see. Does anybody have any questions? I didn't see any comments. Let's see. Nope, won't see any. Okay. Well, so here's what we covered. We covered what is credit scoring, why is it important, what makes up your credit score, specific tactics to improve your credit scores, why credit card utilization is tactic number 1, how authorized user tactic works number 2, how secured card tactic works number 3, and then the making sure your information is correct. That's tactic number 4. Now, I'm not going to tell you that that's all the tactics there are. I can tell you that those are the main ones that we use, and we'd love to help you with if you have any kind of issues like that. Obviously, you see the streaming line with Sandy's number at the bottom and mine there too for to call us. But we'd also like it if you gave us a comment or subscribe to our channel. We'd love that, and we sincerely appreciate that you came on tonight. And listen, we're going to be doing how to get out of debt next week. And we look forward. We're going to be here same time, same channel. And so we look forward to seeing you then. Sandy, thank you for joining me tonight.
Thanks, Mike. This was very informative. I think it was a good presentation. It's a good one for sure. Happy Wednesday, everybody.
All right, guys. Thank you.